if Indian OMCs are overvalued compared to global peers? Meeka, give us that perspective.
Yes, so the Indian OMCs have surged in the past month, ranging from 19 to 27%, fueled by factors like Brent crude prices ranging in the $74 to $84 per barrel and high global petroleum demand. But despite the ramp up, the Indian OMCs trade at a much fairly lower EV to EBITDA multiple compared to their global peers. Currently, the EV EBITDA multiples of the Indian OMCs trade between 3.59 to 5.02, with HPCL being the most expensive and BPCL being the least. Now, while globally, Chevron Corporation trades at a EV to EBITDA multiple of 13.27 and Saudi Aramco at 7.6 and ExxonMobil at 6.39. Now, in terms of historical valuation, also the Indian OMCs are trading at least a 7-year low, while global peers did have lower multiples in FY22 and 23 compared to current levels. Now, OMC valuations are also down from their levels of FY20, where they ranged into 10 to 15 EV to EBITDA multiple due to the Russia-Ukraine war that did impact their earnings. But however, they have recouped their losses since then. Now, in terms of potential for more upside, stable Brent crude prices, despite the disruptions happening during the Red Sea or the production cuts by OPEC, no government policies or no fuel rate cut announcements, and the high demand could help margins. Now, JP Morgan's latest note stated strong integrated margins with petrol and diesel margins nearing $20 per barrel. According to an analyst at Yes Securities, government focus on expansion on energy transition and the elevated capex levels could also help clock higher profitabilities. On the downside, however, despite the optimism, certain risks do dampen the rally. Any increase in Brent crude prices could affect and narrow the margins. According to CLSA, they note that the current prices might be pricing in a much higher than historical marketing margins, and a 5 to 7 rally in crude prices could also not augur well for the marketing margins that the companies are currently enjoying.